Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is a Forex Quick Look. We're going to take a look at the euro versus US dollar as we head to the close for this week and the open for next week. What levels are in play, what the bias is, what are the risks, what are the targets. I'm going to talk about all those things in this video so you're aware and prepared for next week's tradings. Let's get started. I'm going to focus here on the 4-hour chart. Why? Because there's a lot of technical levels in play and a lot of sort of key levels in play here for this currency pair. So let's take a look at them. First off, what do we see this week? We saw lots of volatility. Generally speaking, the first move was to the downside, then the next move was to the upside, and then in trading today we went down, and then we went back up in trading. But overall, if you were to look at the change from last week, it's a little change. This is probably the closing level, and this is the current level right here from last week. Closing level here, current level here. Not a lot of change, so it's sort of like kissing your sister is what they like to say. Anyway, the move back to the upside is now testing a key moving average level. That key moving average level is defined by two moving averages. One is this blue line right here, the lower blue line, which represents the step line here, which represents the 100-day moving average. The other one is this more smooth blue line, and we're on the 4-hour chart, and this represents the 100-bar moving average on the 4-hour chart. So both those 100-bar moving averages are near converged near the 1.0788-ish type level. We're currently trading at 1.0785. Also in play, just above that level, is a 50% retracement. That is of the move up from this low right here, going back to the low price at the beginning of October to the high price going to December. Maybe that's the end of September. I don't know, one or the other. But the 50% comes in at 1.07936. So 88 is about where the moving averages are. 93 is where the 50% retracement level. What that tells me is that is going to be the key barometer for both buyers and sellers as we head into the close, as we head into the new trading week. If the price were to move above that level, we'd probably look toward the 200-day moving average. That makes sense, doesn't it? Even though the price waffled above and below the levels through here and hasn't necessarily done its job, you can go back in time and take a look at that resistance here. And then we had resistance here, resistance here. We broke above it here and took off. And then we had support here and support here. And it got messy through here, admittedly. But moving back to the 200-day moving average and getting above that level would be next be needed to target the 200-bar moving average on the 4-hour chart. And that moving average is moving lower. And over time into next week, it may be the same level as a 200-day moving average, increasing that level's importance going forward. What we can guess is that the 200-day moving average is going to be more sideways here. So this would catch up with it, and that may provide the 26 level or around that level as a key target to get to and through. Following that, we go up to the 38.2% retracement. That's a broken 38.2. The same move to the upside. That level comes in at 1.0875. And after that, we start to look toward up here toward the 1.0925-ish level. Maybe between 10 and 25 on the top side is the next key target for the upside bias. Now, conversely, if the price were to stay below this 100-bar moving averages, or the 100-day and the 100-bar moving average, we could expect to move back down toward the 107.23 level. What's the significance of that? We go back in time and take a look at this high right here, and then take a look at this low right here, and this low right here, and this low right here, and this high right here, and this low right here. All those levels found a deflection or reflection off of that 1.0723 level. So that level is going to be a key level, followed by the 61.8% retracement at 1.0712. Get below those levels, and we did this week. We did earlier the week on the CPI day, but it couldn't sustain the momentum below that level, and we started to rotate back to the upside. But get above those levels, get below those levels, more bearish, and then we'll look toward this swing area down here, where we had swing high, swing high, swing low, swing low, swing low, swing low, swing low, before finally saying, we're going higher in this pair. So that level will be another target on the downside for the euro versus US dollar. So that's my technical look. We're ending the week and going to be perhaps starting a new week at a key barometer, the 100-day moving average, 100-bar moving average on the 4-hour chart. That's a nice neutral level, a level where both buyers and sellers can say they're happy. but at some point the market's going to move away from those moving averages, and we're going to get some sort of move in the direction, hopefully, of the break. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.